folks. A very good morning to all our viewers who've tuned into this live broadcast here. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that you need to be watching out for that could go on to impact your trading day. But let's look at what the trade setup is looking like. Well, Indian equities could see that potential pause or perhaps a pickup in the rally in the near term. At least that's what we've been seeing in trade. Markets managed to snap that 6-day winning streak yesterday. But from here on, it will only remain to be seen which direction we go to. But if you look at the global setup, we did see mixed trade on Wall Street, where we saw the Nasdaq coming under some bit of pressure, but that was then relieved in the futures trade. At least we also saw the Fed minutes that were released yesterday, and it showed that the officials did express some bit of a caution about lowering rates too quickly in that last meeting of theirs. But post-trade on Wall Street, we did see Nvidia, which posted its results, and of course it was some stellar bumper results, one could say, where the revenues are up by about 265%. This on the back of that booming AI business of theirs. If you go across to the Asian markets, those are trading mixed as well, but we are seeing Japan's Nikkei, which is surpassing its 1989 all-time high. So you're seeing some new levels there coming in for the Japanese market as well. If you look at the trends on the GIFT Nifty, that one too is indicating quite a strong start for Indian equities. Gains of about 83 points or close to 0.3% is what we're expecting the Nifty to open in. But if you go by yesterday's trade, we did see FIIs or our foreign institutional investors going on to buy shares worth about 284.66 crore rupees, whereas this time around it was the domestic institutional investors who went on to be net sellers, selling about 411 crore worth of stocks. This is the provisional data that NSE puts out. But let's also look at the F&O plan, and if you look at how the put-call ratio has really turned out for the Nifty, this really indicates the mood of what the equity markets are looking at, and we did see a decline in that ratio to about 0.85 versus the 1.24 levels that it saw in the previous session. Remember, a PCR below 1 indicates that trading volumes are higher on the call side and the put options, which generally indicates a bullish sentiment. So that's what we are poised for at the moment. Let's also tell you about the F&O ban and stocks which are under that ban. We are seeing what NSE has gone on to add Ashok Leyland, Piramal Enterprise as well as PVR Inox into that F&O ban list, whereas it's gone on to retain a couple of shares. These are of Balrampur Chini, Bandhan Bank, Biocon, Canara Bank, GMR Infrastructure, GNFC, Hindustan Copper, Indus Towers, Nalco, RBL Bank and also Z Enterprise. All of these stocks are continuing to be in the ban, whereas the one that has got out of the ban is a SAIL. That one has been removed from that ban list. But let's discuss all the other stocks and strategies that you need to implement in today's trading session. We have quite the setup there laid out for us, even what we're getting from our handover as well. Let me bring in Chandan Taparia. He's a Senior Vice President for Technical Research at Motilal Oswal. Good morning, Chandan. Thanks so much for joining us here this morning. But let's get straight to the levels that we are seeing. We touched new highs yesterday. 22,249 is what we touched, and then we saw that reversal trend in the late hours of trade. But possible profit booking is what we're going to see even in today's session, or would you call it consolidation at that higher levels, because we are seeing higher highs, higher low formation. And what would you expect now happening today, at least in this session for the Nifty?
Good morning. Thanks for having me. You explained the market setup very well. So talking about the index, it made new lifetime high of 22,249 and then witnessed some profit booking in last hour, drifted below 22,000. So major trend is intact and we have positive bias, but yes, some consolidative move can be seen as market is absorbing, supplying at new high zone. In earlier instance, Nifty made high of 22,124, 22,126. And this time the higher base is clearly created. So we believe that even after some profit booking decline, the base and levels of index are shifting higher, and because of that, market would continue to cheer the positive sentiment even after a small profit booking declines of last trading session. So by keeping the entire stance and internal of the data, we believe that buy on decline could continue with support of 21,750, and index has all potential to head to us new lifetime high and a fresh rally to us 22,350 to 22,500 zone soon.
So we are hoping for another lifetime high, at least maybe in this session, or profit booking. It could go either way. But let's also switch focus towards the bank Nifty. Now that one too saw some bit of profit booking after that 6-day run that we saw. The index, touching that 47,000 levels also, and also consolidating around there. But you do have a certain stocks in this index that, are really showing a lot of divergent trends. One would say, if you have to just pick out an HDFC and what that has been doing of late, touching, really not supporting the rally, but making those fresh lows where people could then enter. So how would you be looking at the bank index, as well as particular stocks that you would pick out from there?
Yeah, so talking about this rate sensitive index, Bank Nifty given a consolidation breakout of last 25 trading session. Technically, it formed double bottom on daily chart and managed to surpass and hold above is 50-day exponential moving average. However, we witnessed some profit booking decline, but trend is intact, and we believe the breakout could be retested to start the next leg of rally. However, on overall tone, the Bank Nifty underperformed, but in last few sessions, we have seen some outperformance and momentum even after nervousness from HDFC Bank and other name. So we believe first that Bank Nifty will continue to hold the key zone. Buy on decline could continue with support of 46,500. We have potential for a move towards 47,500 levels. Now, going with a specific name, HDFC formed the bottom, but concern is the follow-up is required. 1,500 is a level where we have witnessed sustained call writing. So here, momentum is not getting the follow-up. That is the only concern. So I'll avoid HDFC Bank. If you want me to go with bullish stance, then I'll go with State Bank of India, one of the strongest name. We are more positive on PSU than private bank, but PSU banks are having less weightage, so that may not add value and momentum to the Bank Nifty net to net. But yes, overall in Bank Nifty, we like SBI and PSU name. One can buy SBI with support of 758. It has potential to rally towards 800 plus level. If I talk about other name, including ICICI Bank or Axis Bank, then some range bound bias could be there. But ICICI Bank is one of the strongest setup. If you want me to add one name in private bank, so here one can go with buy on decline stance with support of 1,035 for an upside move towards 1,095.
Right, so from the PSU pack, you're sticking with the largest in being SBI, whereas among the private banks, HDFC not yet, but ICICI Bank does have some promises. Do stay on with us, Chandan. Let me also address a couple of stocks that we could see, some bit of traction once the bell rings there for the opening. One of them will be Grasim's. Now this because the company is all set to enter into the paint sector. And remember, the chairman Kumar Mangalam Birla will be launching the group's Opus Paints. Birla Opus is what it's going to be called. That business is going to be inaugurated with 3 plants, one in Panipat, one in Ludhiana, and the other one in Cheyar in Tamil Nadu. So that's what we can look forward to. And remember, this is also coming at a time when they are looking at the paints business. They did convey that they would be looking, foraying into this business back in 2021. But today it's also coming at a day when we are seeing, Jefferies go on to downgrade something like an Asian Paint. So to see that dichotomy is going to be interesting. In fact, maybe we can ask Chandan to come in on that also and, give us his take. Do you think there is more steam in this whole paints the sector as a whole, and why are we seeing these kind of, one side there's a downgrade coming, whereas on another side an important launch happening?
So yes, a very valid question and related to certain momentum name even after the decline in the market. So Berger Paint has recently formed the bottom. In last 20 days, 2 times it formed the bottom near 542, 543, which clearly indicates that some sort of stability is there, and now it's surpassing its falling supply trend line. So I think Berger Paint could be one name with support of 560, which has potential to move towards 590 to 600 level. So I think we should focus on Berger Paint in the paint space.
Right. So Berger Bank is Chandan's pick from the paint stocks at least, and we'll see how those react. But on your screens there, market opening, we're seeing a Nifty a bit of pressure, just 0.1%, but holding on to, we would say that 22,000 levels, at least what we were looking at, whereas the Sensex also there now below at 72,500 odd level. So we would say rather flattish start for both the indices, and perhaps, we'll wait for some time for it to pick up that momentum. But the bank index also seeing some bit of pressure, 0.2% down, next to that 46,000 levels that we are seeing it come below to. mid cap and the small cap indices. Now, those ones have been quite the outliers. Even in today's trade, we are seeing that one show some bit of resilience. The mid cap index there on your screens in the green, whereas the small cap index also there some bit of gain, almost close to climbing up to that 0.5 percentage point, we would say, for the BSE small cap index, whereas the other sectoral ones, Nifty IT, now that's where we're seeing some bit again a different kind of trend, because yesterday if you looked at IT, that was among the biggest drags, we would say, but of course it has got that fillip coming in from what we are seeing happen across the globe, where we saw tech stocks really give it a punch after those Nvidia results. So Nifty IT there in the green, Nifty metals too, more than 0.5 percentage of gains there coming in for the metal index. So some good news there. Pharma, on the other hand, seeing some bit of pressure, and you're seeing that counter down and about in trade. FMCG also looking at a bit of negative momentum at least. Auto, on the other hand, in the positive, at least 0.5 percentage of gains coming in there for the auto index as well. So let's also look at a couple of the ones that are actually putting in that momentum for the index. We could say either the profit booking or even, where is that gain or even loss coming from. The gainers and losers there on your screens in just a jiffy. And there you can see it, Grasim's, after that news that we were just talking about, entering into the paints business. Tata Steel was the top gainer even in trade yesterday after, rise of coking coal. That news really pushing that stock higher. Hindalco, another metal name there. So you have metal counters on the top there. You have Tech Mahindra, Axis Bank and Coal India. All of those as your Nifty top gainers. Eicher Motor, TCS as well as Wipro. So the IT names, the auto names as well as metal names. And those are the top sectoral gainers that we saw as well. And all of that showing up in the stocks that are also really giving it that momentum. Whereas on the flip side, let's look at the losers then, and there you have it on your screens. Asian Paints, of course, after that downgrade that has come, Asian Paints there in the negative. HDFC Bank continues there in that negative momentum. BPCL also there down. Even yesterday among the top laggards in trade was BPCL on your list. You have Power Grid, you have DRL, that again coming after some news coming there for that counter. Dr. Reddy's seeing some tax notices, whereas Bharti Airtel being another one of your top losers. Bajaj Finance, HUL and Ultratech Cement being the other counters among the laggards. Well, let's go back to Chandan then and get his sense of what he's making of the markets. We did expect the GIFT Nifty at least was showing a little bit higher start, but we have started a little bit in the red, we would say, but holding on to that 22,000 levels. What would be the levels, the support and resistance you would look at now, Chandan?
Yeah, so we will continue to be with buy on decline instance with the view that selective stocks will perform. However, upside is kept. Today we have weekly expiry as well, so some sort of volatile swings will be there. So for me, the important is not to break 22,000. If today doesn't break 22,000, then I'll go with buy on decline stance. If it breaks, then I'll be on sideline. But again, not changing the view because major trend is intact, and I would suggest to go with major trend in the market. So if manages to hold 22,000, then I'll expect a swing to us 22,124 or 22,222 kind of level. Similarly, if you talk about Bank Nifty index, Bank Nifty again managed to hold opening zone. Major support is at 46,750 on immediate, but positional is 46,500. Here I want it to hold above 47,150. Then I'll go for long position. So Nifty is buy on decline, but Bank Nifty requires follow up and hold beyond 47,150. Now talking about the stocks, I'll recommend to buy on Geo Finance, one of the preferred name. I'm expecting a further momentum. One can go for intraday, positional, short term, or even portfolio name. Major trend is intact, making high tops, high bottom from last 3 days. With support of 291, this stock has potential to move to us 310 plus kind of level. So apart from indices, Geo Finance could be one name. We have positive on selective IT names, so can go with long on Dixon with support of 6650, and stock can head towards almost 7,100.
Chandan, because you mentioned Geo Financial, and one needs to also then pull up PayTM, because we've seen quite a bit of action on that one of late. Of course, this coming in after that RBI results, and we've seen lots of swings for this particular stock. But yesterday we saw it locked in that upper circuit for the third session, gaining their trying to pair those losses, at least we could say, after we did see what the RBI came out and did. We did see that deal that it came up with Axis Bank as well. Now Bernstein has gone on and given an outperform call, but on the flip side, you're also seeing other brokerages maintain their call but revising their target price for PayTM. So how should one really be looking at this stock? Do you think it's still a wait and watch till all those regulatory hurdles are not cleared out? Or you think, the management is at least trying to bring in some solace, trying to act in time, and so you think this could be a good entry point then? Chandan?
Yeah, so you are talking about PayTM, but I'm totally looking at the Geo and momentum, that how this stock is doing well even after the market consolidative move. Talking about PayTM, I'll avoid as of now, because major trend is negative. We witnessed some recovery, but again follow-up is missing. So it's very tough for me to comment on PayTM because major trend is not turning on upwards. However, some bounce could be there, but it requires follow-up rather than turning from lower zone. So I'll wait for 410, 420 zone to stable, then only I can look for next leg of rally. Otherwise, I'll avoid and go with other name which can generate alpha in the market without much pain.
In fact, because you did mention before this about a couple of IT stocks that you'd want to, and you also mentioned counters that you'd look at. We just heard from the Fed minutes also that came out overnight, and there it is conclusive now to say that, the rate cuts are not coming anytime soon. Do you think that could add more pressure to IT names, at least the larger ones?
Actually, I believe in IT, selective stocks will do well. We are more focused on selective mid-cap IT with the view that momentum is clearly visible, and that is the reason that we'll stick to certain counters. Dixon already I suggested expecting a move towards 7100 zone. So already we talked about it, not expecting decline but expecting momentum to catch in the Dixon. Apart from Dixon, you can focus on other name, can select HCL Tech because major trend is positive after the consolidative move of last 10 days. Trending upwards. 1620 is the support for a move towards at least 1710, 1730.
So much for that, Chandan, for giving us his picks from the IT pack and also how we should be looking at today's trading session. Thanks so much, Chandan, for your time and for joining us on the show today. Well, since we talked about IT stocks, one that I would like to point out to is Wipro, because this one has managed to finally win a deal, and this is with the designing for Intel's latest chip. Now, the exact amount for the deal has not yet been disclosed, but we're being told that Wipro's engineers will be working with Intel's latest 18A chip node, and this deal in fact will be with Intel's foundry, is expected to be one of the largest deals that Wipro has signed in the last 3 years. Now, whereas the other, its peers like Infosys and TCS have managed to get those big deals which we value at above 1 billion, whereas Wipro has not seen too many of those. In fact, it has seen a slew of exits from the company, so that has been some bit, but now some good news coming in there, we would say, and the counter also there among the gainers. The deal definitely will be catering to the chip design, so we're talking about a hardware more than software as such for the clients across their auto, industrial as well as telecom verticals, is what Wipro has gone on to file with the exchanges. So that will be interesting to see how this deal, or we'll hear more about it perhaps in their next earnings. But let's also look at the fundamental side of the picture and how India really stacks up, because we did have some good news to cheer, one would say, because if you go by what Jefferies greed and fear report that came out last evening, we did see that they say that India is going to touch that $1 trillion GDP, become the third largest economy just even before than what was anticipated. So let's talk about more the macro fundamentals and how that really stacks up. And joining me for that is Gaurang Shah from Geojit Financial. Good morning, Gaurang. Thanks so much for giving us your time and speaking with us here at Money Control. Let's straight up start with what's happening in the larger picture, because we are seeing, we have the FOMC cues that have come overnight. So we have how tech stocks in the US have reacted to Nvidia's earnings that have come in there. So the whole AI play also, transpiring, we could say, or transcending to our IT stocks here. But how do you look at where India is placed at the moment? Most of, we do still have the elections to be looking forward to. But what would you say are the, future headwinds that we could face from here on?
Good morning, and thank you for having me on the show. So, first, to answer your question on the Fed chair's decision as to when they will cut the rate or whether they are going to cut the rate or not. And last week also, if you actually go to see, we had some data points which were disturbing from the US. Now, according to my understanding and my knowledge, Fed chair never said that they are going to cut the rate at a given specific date, whether it was in Feb, whether it's going to be in March, or whether it is going to be in April. Fed chair did say that we are going to have an accommodative stance. It's all going to be data dependent. And as and when we have the data sustaining over a period of couple of months, we will decide on the rate cut. It was the market participants out of US who expected the rate cut to come through either in Feb or in March or in April. So if you go by the Fed chair statement, they never mentioned any specific date. At least that's what my understanding is. Point number two, whatever data comes, whether it is the Fed or whether it is any central bank in any part of the world, in any country, they have to depend not on 1 or 2 months data. They have to depend upon couple of months consistent data wherein they get a sign of cooling off of inflation and they can possibly step in and cut rates or take a decision thereof. So it's not going to be 1 or 2 months data. It's going to be a couple of months data that will be depending upon who cuts rate and when. On markets, well, I think after 6 days of rally, we saw a small consolidation yesterday, profit booking, a minor profit booking this morning. I don't think anybody has to complain after you see this kind of rally, which has enabled us to reach an all-time high on the Nifty and possibly towards the all-time high on the Sensex. Curtains down on Q3, I don't think one has to complain in terms of large dark spots. Specialty agrochemicals was one, FMCG was the other, which kind of disappointed marginally, nothing big over there also. And in terms of where do we go from here, I think a brief period of consolidation, then again an up move. And very soon, all of us will be stepping into the election mode. And possibly the markets might consolidate as we approach the election date. And of course, finally, the outcome of that election. Post that, my sense is that we are possibly preparing a ground for multi-year growth story. You will get bouts of profit booking, no denying about that. But my sense is that if crude oil doesn't play a havoc, if rupee dollar equation does not create a lot of tantrum, and if there is no uncertain geopolitical awkward situation coming up on the horizon, then I think we have possibly laid a fair level of flat pitch for us to possibly bat for a pretty long period of time or play pretty long period of time.
Right. So, Gaurang, are you saying that we are heading towards 25,000 levels post elections? At least, is that what you're saying? And what are the kind of returns one could expect, at least for the markets this year?
Well, so I hope that the election outcome is as per the general consensus on the street. I'm not a political expert, but at least that's the feeler that we get. But 25,000, I don't want to put a number, but in terms of percentage, if you ask me, calendar year 2024, Jan 24 to December 24, I think I would be happy to get anywhere between 12 to 15% return on the indices. Okay. Sectorially, stock specific, you might end up getting even more than what the index has delivered.
Right.
This is on the conservative side.
Right. So 10 to 15% is what Gaurang is at least looking at. Now, to help us, pick out sectors and stocks in this current market. Now, we did see that flip-flop that we saw in between when there was some bit of consolidation correction where people said, stick with the large caps, whereas you can wait it out for the mid and small cap, and that part is over. However, we are seeing right now also the mid and small cap are the ones that are pretty much holding or showing that bit of resilience. So how is one supposed to be, playing this at this point, whether it would be a large cap versus mid cap or small cap?
So I'll say a balanced portfolio between both large cap and mid cap. As far as small and micro caps are concerned, I think you need to put your investments under the microscope and possibly take a call whether the company deserves to get invested in or not, because there is there are a lot of names, to be very honest, which are flying around without any credibility. So If you don't want to venture or if you don't want to be a Robin Hood, stick to the basics, sticks to the large cap first, selective mid caps. Again, sector specific would possibly play out well over a longer period of time. But small and micro is something, unless you don't know, don't do it. If you know, be very, very careful.
Right, Gaurang, what about the whole PSU play? Because we are seeing a lot of people, especially the mutual funds and retail investors as well, they've been stepping up and buying PSUs. Maybe this is, we saw that happen in the run up to the budget. Now we have the election also. How would you play them? And in fact, PSUs form a big part of your mid-cap stocks if you have to see. So how should one really be looking at that? And what would be your picks among them, among PSUs if you had to?
So let me just broadly lay down certain sectorial themes as far as the PSU universe is concerned. We like PSU banks, public sector banks. State Bank of India, Canara Bank, Bank of Baroda, PNB are the few names that we are positive on. Amongst the energy side, we are positive on both oil exploration and oil marketing companies. So you have likes of ONGC and GAIL. On the exploration side, on the oil marketing side, positive on BPCL and IOC. HPCL is under review, so I will possibly wait for the outcome to come through as far as the under review situation or status is concerned. In the capital goods, engineering, defense side, if you will, we like names like BEL, BHEL, names like Cochin Shipyard, to name a few. During the IPO, we were positive on the likes of Hindustan Aeronautics and Bharat Dynamics. This was during the IPO, and I think the defense theme continues. Amongst the power generation, we are positive on NTPC, and a company which is possibly a dominant play or a virtual monopoly in terms of power transmission distribution is Power Grid. In terms of themes, my sense is that defense, railways, power generation, power transmission distribution, and power equipments. I think all these are going to play out very well because of the longish order book they are going to receive, and on execution of that order book, I think for a pretty long period of time, the earnings are going to look very, very robust.
Right. So interesting. You're definitely seeing defense names there, also power that could actually play out quite well. But another, coming back to how the government's working now, last evening we did see the cabinet go on to approve the hiking the MSP for sugarcane procurement to about 340 rupees per quintal for this coming session. We are, there's a lot of noise around what the farmers are demanding, and whether that is something that the government can bend and achieve, or come to a consensus at least. But how do you see this playing out, and do you think today, at least after the FRP for sugarcane, do you think sugar stocks would actually get that sweet pill or sweet relief?
So I'll comment on the sector because we used to cover Balrampur Chini at one point of time, but the stock price is overshot our target, so we don't have any current coverage in the sugar universe. But more than the sugarcane pricing, I think the attraction towards sugar related stocks is more because of ethanol growth story. And as and when we have more blending coming through from the oil marketing companies, as more and more alternatives from naphtha to ethanol has been switched over, my sense is that you are going to see a lot of positivity. Along with that, over the last 3 years, if you actually go to see, then there has been a consistent increase in per liter price of ethanol over a period of time. So that's also driving sugar companies to produce more of ethanol, then focus more on sugarcane. And secondly, I think monsoon had been very erratic last year, which played a havoc in large states which were sugarcane producing states like Uttar Pradesh, Maharashtra, and Karnataka. So government on and off comes and steps in terms of policies which may create positive or negative impact on the sugar industry.
Right. Also, your view on OMCs, because I'm just reading now that CLSA has come out with a study and saying that OMC stocks are kind of overpriced and they are warning of certain headwinds. Whereas on the other hand, there is a Motilal Oswal report that says ONGC and Oil India have more value on the upside. So what is your view when it comes to OMCs, and any picks that you would have in this lot?
So, not only public sector companies or maybe oil marketing companies, oil exploration, or any stock or any sector which goes up, consistently over a couple of days, it possibly reaches a point wherein it has to correct from there. And absolutely no denying in terms of pricing, most of the stocks, as far as oil marketing companies are concerned, are possibly trading over our target price. So, like I mentioned, we are positive on BPCL and IOC. HPCL is under review. ONGC and GAIL are the other two stocks that we are positive on. And if I have to pick one name in this particular sector from the private universe, then it's going to be Reliance Industries. They have the refining, they have the oil marketing, and they've got a diversified business which is going to last for a pretty long period of time. Oh, we've been positive on Reliance also for a long period of time. But my sense is that governments, earlier dominance as far as interference is concerned in the PSU companies is now a distant, far away fact. These companies are now able to do their business as per the wisdom of the management and not as per the interference of the government.
Right. Before I let you go, Gaurang, one final question on the consumption pack or, those stocks. There is news coming in, or at least reports suggesting that ITC could be looking at a 47% stake in Pratap Snacks to, expand its regional presence. Whereas yesterday we saw a huge block deal when it comes to Devyani International. That definitely in the QSR space, but still among the consumption as a whole, how would you look at this story, and how will that really play out, and could there be some kind of divergence when it comes to your staple consumption names, your HUL, Nestle, whereas the QSR side of the story being quite different?
So acquisition for FMCG companies in terms of organic or inorganic growth will come in form of opportunity and the valuation and the product addition that they will do. Now, you mentioned Pratap Snacks. I would also want to mention Bikaji. These are not recommendation. I'm just mentioning these. These are regional players. Any large city, mid-sized city, small city, or maybe you go to the remote part of India, semi-urban and rural India, a small shop will have multiple products on the window of that small shop displayed of which are manufactured by either, Pratap Snacks or Bikaji. So that's the kind of presence that they have in terms of distribution network. Acquisitions will be done by large companies of these regional players, but it will all depend upon what is the valuation and what is the growth that lies ahead. So we remain positive on FMCG companies. Like I said, last year monsoon was erratic. That had an impact on the volume growth. Rural and semi-urban demand came in very low and at a low end of the product, not at the mid or the high margin products. But we believe that India was, is, and will always remain a consumption-driven story. And we have a strong population of 35% at the age of 30 and below 28, which will again be a driving force. So we like ITC, HUL, Dabur, Marico, Imami, Godrej Consumer Products, Tata Consumer Products, Nestle, Britannia. I think I would have named.
Yeah, you pretty much named all of them, but I really wanted to ask you whether should we really be sticking with these consumer staples, or should we be looking at the discretionary play, because we've seen a lot of demand coming in from that side as well, this premiumization that's happening. So at this point, would you still stick with the staples?
I would say that go with the balanced approach over here again, because both will command its own earnings as far as demand growth is concerned. While as staples will be driven by basic consumption, discretionary spend will be dependent upon mid and high middle class and ultra HNI kind of class. So you have names like Titan, you have names like auto as a discretionary play, you have names like consumer durable goods, white goods, appliances as a discretionary play. But pick and choose between the two to make a very decent portfolio.
Well, thanks so much for that, Gaurang. Really giving us a whole lot of mix that we can be looking at and the sectors that we could be watching out for. But thank you so much for joining us on the show this morning. Well, with that, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for watching. Do post your feedback for us in the comment section below, and follow us on the link at the bottom of your screen. For the rest of the updates, do stay tuned to moneycontrol.com as well as the Money Control app.